Welcome to Markets Now. I'm Michelle Rook along with Dwayne Bussey of Bolt Marketing. It was a down day in the commodity sector except for cattle. And Dwayne, let's talk a little bit about some of the money flow issues that we saw kind of tied to the CPI.
Yeah, it seems like with that CPI number coming in better than anticipated, money started to leave corn and soybeans here today and kind of went into the stock market. Stock market having a great day today. US dollar down hard as well. Maybe, just maybe, some people are talking down the recession a little bit. With that lower CPI number, what happens is the future, remember, this is a futures market. So we're talking about maybe the Fed will raise interest rates again next month. But then after that, as we flip the calendar going into 2023, maybe they ease off the rate increases a little bit. And of course, like I said, being a futures market, that kind of turned the table for us here this week.
Yeah, and a lot of chart-based selling in the entire grain complex. Did we do any technical damage in corn or soybeans?
We did in the corn market, I think. We've been in that sideways pattern for what seems like forever, kind of lulling us to sleep a little bit. We broke that first yesterday morning and got back above that range, and then we broke it hard today. So yeah, we did some chart damage in the corn market, but overall, we're still holding some key moving averages. And remember, with our tight supplies, which USDA showed us again this week, we can't just fall out of bed with these prices, especially if the US dollar goes down hard, Michelle. Then that'll actually encourage more export demand. And remember, our tight supplies, we can't have a whole lot of exports in 23.
Well, export demand was part of the problem with today's grain sector as well. Kind of disappointing all the way around on the weekly exports, right?
Yeah, it really was all the way around. Soybeans are okay. The main thing, the soybeans, they're not the huge export sales we are used to seeing this time of year. But remember, we had such a fast start to that export sales base in soybeans this summer. We're kind of just catching up there a little bit. But the corn export demand has been kind of pathetic. There's no doubt about that. And so I think USDA will eventually have to lower export demand for corn. And I think the market knows that. And that's why you're seeing so much selling pressure today.
Yeah, I think we were all surprised that they didn't do it in the WASDE yesterday.
I really was too. Everyone was anticipating that. That wasn't a bad report, and that's where I'm getting at. When it comes down to the ending stocks this week, our supplies are still pretty tight, but we're about 60 cents, or we were about 60 cents above the rest of the competing export global market out there. But that's what I'm getting at. The bulls will still have support to these markets if they dip down too far, because you might see demand actually pick up just a little bit.
All right, so with how we left the market technically today in corn and beans, do you anticipate more follow-through selling tomorrow?
I actually don't. I think we're going to rebound tomorrow. I think we overdid it a little bit today. I kept searching, honestly, for more news, hoping to have some insight for you when we did this interview, but it's fairly quiet. I think once we ran some sell stops underneath this market, the selling accelerated and buyers just kind of stepped back a little cautious. I think if the dust settles a little bit this afternoon, you'll see some buying pop back on Friday.
Yeah, it was interesting to watch, though, when you had the dollar imploding over 2 percentage points, that you couldn't get the grains to get some support. Maybe the only exception would be the wheat market wasn't down as hard there. And wheat continues to kind of hold $8 support here in that nearby SRW contract, doesn't it?
Yeah, maybe temporarily, though. Hey, that wheat market looks like it's in a little bit of trouble, especially chart-wise. And it seems like the Ukrainian exports are just going to stay open and keep flowing. Now, yes, there'll be different news next week. I'm sure that Russia's going to shut it down somehow, some way. But as they left that export agreement for about 24 hours there, the exports continue to still roll out. So I think they're going to keep that corridor open, and I think the market knows that too, Michelle.
Yeah, and there's been talk of maybe them extending it for a whole year. Do you think that's too optimistic, or?
I know that's what Turkey wants to do in the UN, and why wouldn't they? I don't. A year is maybe a little too optimistic, but I think they will get extended somehow, some way. It's funny, the market finds a way. When you get higher wheat prices globally, we'll find a way to move that wheat.
So cattle had a nice day. Was that just about what the stock market was doing, the lower corn? Was there anything more to it?
Well, the lower corn market always helps the feeder market. And, that one was the one that kind of led the livestock complex today. So, yeah, that helps. But this is a strong market by itself, too. On the live cattle side of things, cash market maybe up just a little bit this week. We're still holding above the 150. What's been impressive there is that the cash market is staying solid and trending up a little bit, even though slaughter's been really high. We're still finding the cattle. I keep promising all summer long and all year long that our numbers were going to get lower. They never really have, Michelle. But one thing that is good is demand has been good domestically, I should say, because exports are pretty sluggish here recently. So, no, I think that market's got a good leg to stand on. I think the live cattle will keep continuing to trend higher in 23.
Yeah, and 150 and I think 242 cash trade this week, which would be steady. So like you said, we're still above the board with that. Was that a disappointment to the market or not?
It may be just a little bit. In typical futures market, we always kind of get a little far in front of ourselves a little bit. And those back months might be just a little bit when you look at April, approaching 159, getting pretty close to 160. But, it's a futures market. I think what we're going to see is the sharply lower placements on the cattle on feed reports moving forward. And I think the futures market knows that. That's why these deferred contracts are trading at such a premium to nearby.
Yeah. Hog setting back today, and of course, the cash market seems to be really the big key there, doesn't it?
The cash market is holding that lean hog futures contract up, but I think in this case, I think the cash is eventually going to go down to meet the futures. We had really poor exports this week. I just don't think China's going to step in like we want to buy our pork, and I think we have plenty of supplies here. So I think the futures market is going to grind lower. It's kind of odd to be calling for a higher beef cattle market and lower lean hogs, but maybe I'll be right on one of them anyway.
Yeah, exports were not that good this morning either, and China has not been, the big buyer I think some had thought.
Right. Their hog prices really skyrocketed here the last quarter, and we thought, they're going to have to come in and buy our hogs. And whenever you say China has to do something, it seems like they do the opposite.
Right.
No, I was pretty disappointed in those export sales. And that's one of the reasons I'm bearish this market. And actually, hedgers might want to look out to those next summer contracts, 105 in June. That might be a good hedge position right there.
Yeah, there's some nice premiums in those back months, as you mentioned. All right, thanks, Dwayne. Dwayne Bussey joining us with Bolt Marketing and Markets Now.